In today's video, I will be doing an in-depth analysis of the stock Omega Healthcare Investors. The symbol is OHI. They are a REIT that deals in assisted living facilities and nursing homes. The main tailwind for this stock is the United States demographics. As you can see from the chart on the screen, the baby boomers are starting to get older. They are starting to need to move into nursing homes or assisted living facilities. And as you can see here, the number of births during the baby boom years are significantly higher than most of the other periods. And now that these people are starting to get older, they are going to need to move into nursing homes and assisted living facilities. And this will be great for Omega Healthcare investors. This graphic here is looking at the current occupancy rate of senior nursing facilities. So if you look at right now, or I guess in 2015, it was 82% full. Up to 2020, they're projecting they will be 91% full. And then by 2025, they will be over capacity at 105%. So this means that more nursing homes and assisted living facilities are going to need to be built to meet the growing need for them due to the aging baby boomers. And so Omega Healthcare investors will be able to fit this need by owning the real estate that these nursing facilities go on. So this table here is very great. It gives us tons of info on Omega Healthcare investors. So we will start by looking at the dividend for Omega Healthcare investors. And they have consistently raised this dividend since 2007. You see in 2007 they were paying a 27-cent dividend all the way to now in 2017, where the first quarter they paid a 63-cent dividend, and they have consistently raised it since then. So that is great. You can also look at their dividend yield, which has been between 5 and 10% over the last 10 years, which at a current dividend yield of 8% means that they are trading near the top of their historical dividend yield, which is good to see. That means that you are getting a good yield right now compared to their historical average. And then if we also look at their adjusted funds from operation per share, that has consistently increased as well, going from 33 cents in 2007 all the way up to 85 cents in 2017. So that's great. We can also look at their guidance compared to their actual results and see that Omega Healthcare investors has never come in with their adjusted funds from operation below their guidance, which is really nice to see. Most of the times they've beat it, a few times they've been within it. So that is great to see. And they've just generated consistent growth in their dividend, consistent growth in their adjusted funds from operation, and currently the AFFO payout ratio for their dividend is at 73.5%, which is really tremendous with a 7.5 or 8% dividend yield that they can be having a payout ratio of 73.5%. This means that they could continue to raise their dividend and still have the dividend be completely safe. So that is always good to see in a company with such a high dividend. Over the last 10 years, Omega Healthcare investors has had a price to adjusted funds from operation multiple of about 11.6 on average, and right now their price to funds from operation is 9.2, meaning that they are trading at a discounted multiple to their historical average, which is always nice to see and could signal that it is a good buying opportunity in this company. And again, back to the dividend, they have had a very good history of increasing their dividends and having a very high dividend yield. So you can see the number of consecutive quarterly dividends paid since 2003 is 55. The number of quarterly dividend increases since 2003 is 41. And the number of consecutive quarterly dividend increases is 19 right now, which is great to see that they are committed to generating good shareholder value by increasing their dividend consistently. And with a current dividend yield of around 8%, which is looking safe from their adjusted funds from operation payout ratio, they have one of the higher yields of any REIT, which is great to see. And with a 7 to 8% dividend yield, you really don't need very much capital appreciation to generate good returns. I mean, I'd be happy if I generated 7 to 10% yearly returns. And so with a 7 or 8% yield, you really don't need the stock price to go up very much, if at all, to generate a satisfactory return. And I do think that there's room for the Omega Healthcare Investors stock price to go up, as well as for them to continue paying a strong dividend and to raise that dividend. So I think that there is a great chance that Omega Healthcare Investors is going to outperform the market over the next few years. We will take a look at Omega Healthcare Investors' debt, which is very manageable. It is spread out well over the next 10 years and is fixed rate, so that is good to see. They're not going to have problems if rates go up. And if we look at their revolving credit facility, that is higher than all of their debt payments for each year, so that means that they will easily have the debt payments covered, so that, like I said, is always good to see. They also have a net debt to adjusted annualized EBITDA of 4.78 times, so that is good to see as well. That means that they will easily have their debt covered by their adjusted EBITDA. I will now address some of the possible headwinds for Omega Healthcare Investors. So one of the main possible headwinds for Omega Healthcare Investors would be if Medicaid was significantly cut, and then seniors were unable to afford to be able to stay in the nursing homes because they weren't receiving money from the government for that. But I really think it's unlikely that the government is going to leave a bunch of old people out on the streets with nowhere to stay. So I really don't think that this is going to be a serious problem for them. It's something to keep an eye on, but it should not have too big of an effect on Omega Healthcare Investors. So the next headwind for Omega Healthcare Investors would be that old people hate nursing homes, and I think this is one of the reasons why they have been buying up assisted living facilities faster than nursing homes recently, and expanding that part of their real estate portfolio faster. But I think that this concern is not too big of a deal either, because if somebody needs to stay in a nursing home, then they're going to likely get put in a nursing home whether they like it or not. So in the end, I think that Omega Healthcare Investors is a solid company with a great history of adjusted funds from operation growth, a great history of growing their dividend, and is currently a stock paying near an 8% dividend that has the dividend covered by their adjusted funds from operations. So that is great to see. I think that they are a good company and a great stock to buy in July of 2017. Thank you for watching. Please remember to like and subscribe.